Hi, welcome to Wise Beyond Bitcoin, your home for the crypto neo news, education, and opportunity. My name is Ryan,
My name is Lucas.
and we have another installment in our macro outlook series where we take a look at the macro happenings with monetary policy, inflation, GDP, fill in the blank, and we draw links to the crypto markets and financial markets and talk about what to expect given these circumstances, right? So, but before we jump into that, what do we want to talk about?
Well, we got a whole bunch of playlists. This is your secret update hub. So if you're just getting started in understanding the importance of privacy and blockchain being a public ledger, this is your where to for how to's. We've got a how to start your secret crypto journey playlist where if you're new to crypto, new to DeFi, we show you how to get a crypto wallet, how to secure it, how to send, how to receive, staking. We even have a validator playlist to teach you more about proof of stake networks and how you can benefit directly from doing your own research in what you choose. Secret NFTs are completely different and unique to any other NFT in all EVMs on any public blockchain. So due to the dynamic utility, we have a playlist dedicated to those. And when you look at other decentralized applications, Alter, Jackal DAO, Shade, Silk, there's so much innovation happening on Secret Network that it's difficult to stay on top of it. There's definitely more happening than we can cover. So we just try to share the tip of the iceberg as much as we can. And we look at other things happening, like Ryan said, the macro outlook and other leading protocols or projects with long-term potential. It's not only Secret. There are many really innovative blockchains happening as well and growing up together. So this is an educational resource. It is not financial, it's not financial, legal, commercial information. It's just our research, our perspectives, sharing, hoping to help you in your cryptic blockchain journey. And we're in it together. We're all learning this. There's a lot happening that we don't see and that we miss. So by all means, it's interactive. We do live streams, usually pretty much weekly, and we have interviews often along with that. So subscribe, notification bell that I cover pretty much.
Yeah, I think that's a good intro. And disclaimer, got it all wrapped up. So if you've checked out your favorite crypto market index website, whether it's Nomics or CoinGecko, you might see that there is some red in the waters today. That's not it's something we've kind of accustomed to these last weeks, or is kind of cycling between rebounding, bullish sort of sentiment, and then a day later, things will change and we'll have some red. We'll have a little bit of a sell-off, a little bit of a correcting phase. So we're kind of in I guess what you would say is a uncertain moment in the crypto markets, where we're trying to find the trend, and it's very fickle, right, from day to day. Is that a good word?
Very much. But also we've been talking about this from a macro perspective. We've actually been talking about this since for a while. I mean, winter, since last year, and looking at where the market's at in general, especially with what the Fed has come out and said with what they're going to do and what they need to do with rates. And we're going to talk about geopolitical issues as well that changed since our last macro. So we decided to get out there quick. But the reality is where do you stand, Ryan? I mean, where do you think 1 month, 2 months, 3 months, 4 months, what the Fed's at, and geopolitical pressures, but a geopolitical ceteris paribus aside, even if that were to calm down, do you think that this is the bottom of the crypto market when it comes to?
No, my hunch is that, like you say, 3-4 months down the road, that we might be looking at prices in February 18th, which is when we're talking about this. We might be looking in the rear view mirror and think, wow, that was not a bad local top, right? Not a bad place to cash out and take some profits. No, I'm not 100. I'm always of two minds, right? So I wouldn't be surprised if I was wrong about this. Sure. But if you had to nail me down, that's where I would. That's my hunch, is that we're going to see lower.
Think about that video we just did. Think about the video we just did on the disparity of the interest rates on the euro dollar. So if we were to go off what the markets are expecting in general, we would say this correction might take until early to mid 2023.
That's what the markets are telling us. Yes.
very possible. Now, we always are supporting technology and innovation. We often find that even in bear markets consolidation, it's a great time to learn, find those projects that are innovating. So
Right.
this is not trading advice. We're not into trading. We will tell it like it is and watch everything go down and go down with the ship and then watch it go back. But it's, take your own risks and think about the long-term scenario, and, it could be
act accordingly, right?
Act accordingly. That's it.
Well,
so,
one thing we like to mention when we're doing these macro videos is that there's a real strong correlation, positive correlation between the crypto markets and the mainstream traditional financial markets. And typically when you look at days where there's broad selling going on in one of the markets, the same thing is happening in the other. They move together, right? And so we're seeing that story is also true today. And I'm glad you mentioned the last macro update, because we kind of got whipsawed with the news, right? So the latest update we talked about was tensions in the Ukraine were pulling back, and there was some talk of on the part of Russia that they were moving some of the troops off the border, and there'd be some hostilities were being reduced, and there would be even some diplomatic meeting that was supposed to happen between an ambassador in the West and one of the Russian ambassadors. And so there was movement. There was good news, right? And the markets were up, very much a good news situation. And then not even 24 hours later, we got the word that there was kind of like a head fake that no, there was not troops from not being moved off the border. There was actually just being a rotation was underway, and there was actually more troops being put on the border. And not only that, there was shelling that was started on the east side of Ukraine, inside Ukraine. So there's been a ratcheting up of hostilities instead of a reduction. And so we kind of got caught, caught in just like everybody else watching, seeing kind of like a whiplash effect, and markets are responding. That's what's driving the market response. We're shifting from a risk off mentality back to a risk. Well, I'm sorry. We were shift from a reduction in risk for war into where war is back on the table as being a really legitimate risk. And this is driving all kinds of selling in the stock market. People are buying bonds, and that's a safe haven, right? So when there's a lot of uncertainty in the world, bonds tend to be a place people go because there's at least a chance of yield. If you can get a yield off the interest, it's risk free in that sense. Whereas being in stocks, there could be a lot of capital loss that would happen there. So we're seeing people investors reallocate away from stocks into bonds, a risk off footing. And it's being driven by this horrible news about what's going on in Ukraine. And so we'll leave these articles in the description if you want to read through. But essentially, the idea is that the war story is dominating the news right now.
Yes, the markets react, and like you said, there is a strong positive correlation. And when we talk about till mid 2023, that's when the markets are expecting to rebound. And who knows how close, give or take, it is from there. But this could be the year. You look at El Salvador, you look at many other countries now, Russia and other countries, and how so many more, even in the US, different states have become more crypto friendly, Bitcoin friendly,
right?
And the gateways for adoption, obviously the institutional floodgates have been opened for even some altcoins.
Yes.
And you look at where we're at, this could be the year that we do see more of a decoupling, not some kind of complete, inverse relationship, but we could absolutely see a time when certain sectors of blockchain and crypto continue to grow while a lot of the other market at large is stagnant or depressed, in a recession.
And I think you can see that playing out with the movement to bonds, right? So as people seek safety, they move into a place where they can get a yield. They can commit their resources for a certain amount of time and get some kind of a contractually guaranteed yield. And that's attractive. Well, imagine a period where inflation, imagine a year or two from now where inflation at 7-8% is still a problem, right? Because what if we can't put that genie back in the bottle as easy as predicted? What if these 4 or 5 interest rate hikes don't quite do that, right? And what if the transmission mechanism from monetary policy to prices isn't as clear as we expected, or what if there's more unknowns in terms of how that works, right, than we understand? And so if we could see a world where getting that bond, that coupon payment or that yield in dollars is less attractive given this inflation problem, and that would lead people to thinking, well, what about stable coins? What about crypto investments? What about earning 24% in secret? Right? And or what about earning 100% in Juno? Or there are all these other options, right? So I could see what you're saying I could see a pathway for how that could happen easily.
As more knowledge ripples out, I mean, we need to update our website clearly, but at some point there will be more groups consulting and offering others a gateway to these resources, because it's just knowledge. There are people right now who do their own they're ready, and there are others who are saying, hey, I'd like a Zoom walkthrough, just save me some time and give me the tutorial so that I can save myself hours and learn it in 30 minutes. And you take people to websites and say, look, here's your wallet, here's where you go to transfer from your current currency into this digital world, and here's where you go to earn 19, 18, 14% interest on US on a stable coin, or like that. So as like you said, as more people understand this, and you look at inflation and what's happening in the world at large, this could be not a complete decoupling, but
it could definitely move that way. And I wanted to highlight this too as another example or another instance of some bad news on the geopolitical front. So Russia is announcing plans to hold a missile test on Saturday, and they're going to test the readiness of their nuclear and non-nuclear missiles. So, that's definitely ratcheting up tensions as well, and escalation. And so markets are responding. They don't like war. They don't like uncertainty connected to it. And it's definitely going to be interesting to see if this does play out, if the interest rate hike plan that that the Fed's announced, that is able to continue, because as war is going to drive losses in the stock market as uncertain as we see today. The uncertainty leads to sell-offs, and it's going to lead people to buy bonds, which is going to reduce the interest rates on bonds. So all these things are working against the narrative for a rate hike, right? It's going to be my point is, it's going to be hard to really significantly hike rates in a scenario where the stock market's selling off on its own for reasons not connected to monetary policy. But if it's just a bad news about global geopolitical events not going the right way, you can see a stock market sell off, and then in that situation, how many rate hikes can you really do, before you make that even worse, right? So I could see in a situation where that late 23 prediction for the next round of rate cuts, I can see that being even too long, too far out, that it might even be this year, the end of this year, potentially. I know I'm not making any predictions, but I feel like it could be closer than we expect.
I agree. And if you look at oftentimes in military history and the media, I mean, first of all, the United States and many countries do ordinance with non-nuclear, and I'm sure nuclear, whatever, they have their exercises. So stating that in a report and then stating in a paragraph right next to it, Russia on Thursday warned that it would be forced to respond militarily. It's like, okay, this is not like dropping nuclear warheads on Ukraine. And there's no research on the level of severity of what's going on. This, we could find out more information that this gets resolved in a more amicable manner in the next week or 2 or 3 or the next month or so. However, like you mentioned, it's a very convenient worldwide narrative to keep the money printers going. And we may find that if this goes, we often find that that wars are conveniently timed around certain recessions, depressions, or on the brink of corrections to help keep things going. Hopefully, the growth in the technology sector, which we're seeing, which is just incredible, and we're amidst one of the most amazing technology sectors, markets for generations. When you look at its size of its impact, talking about blockchain.
Oh yeah, it's huge.
That there can be amazing ways, value-added ways to grow the economy and help people without needing some artificial stimulation through violence and war.
Sure, right. Yeah. What if we could get growth? We could have some GDP growth without having to go to war, just through adopting technology and letting that creative destruction story play out. Right. I agree. That would be definitely the best way forward. I would say.
And I will say this, because I don't know, my point is I'm just playing from someone who doesn't understand the background of the story, but seeing how reporting could be done. I was in the Marine Corps infantry. I was a mortarman. I understand when we did a training with different nations in Egypt, and you're laying rounds and ordnance, or if you're in a different MOS, if you have troops stationed on the border of Ukraine and they are firing, they're doing rounds, they could be firing it on their land, doing ordnance training. It could be for show or what have you.
Mm-hmm.
However, you're going to be able to record those explosions. So recording 500 explosions in Ukraine, that doesn't mean that Russia is shelling Ukraine cities or is throwing rounds down in neighborhoods.
No. Right. It's in fields and empty areas. Right. So it's a show of force.
What I'm saying is that there have been times where reports of training exercises or other things have been misconstrued or conveniently reported in certain ways. So I just want to throw out there that no dog in the hunt, other than hoping that people in Russia and in Ukraine could all go home to their families.
That cooler heads prevail. Yeah.
That everyone can go home and celebrate life. And there's beautiful culture and music and dancing on both sides of the border and shared. So, Well,
I think one thing that makes this situation unique from the kind of situations you're talking about is that normally when those exercises are engaged in, there's an agreement, right? Like the nation state that's hosting these exercises is aware of it, and that they're on board, and then there's cooperation and coordination. Where in this case, we're talking about, it's just coming across the border, and it's not coordinated in the sense.
You can often find where in the U.S. especially is the military, where they're doing exercises near countries all the time, and it matters not what you think or what your country nearby thinks, because this is where we're doing the exercises in the ocean. This is where we're doing the exercises, and this is our area of doing exercises.
Our sphere of influence.
Yeah, so it's kind of like, I mean, what's really happening now? It could be that this is some heinous things are about to go down, and I don't know. So I'm just stating, keep an open mind and do your own research.
Right.
This is not military journalism or reporting.
No,
absolutely. We're just talking about news as it comes, true or not. This is the news that has an effect on the market.
Right. Absolutely. This is what people are talking about.
For sure.
And we're going to continue covering it as only we can. Right.
That's absolutely right. We enjoy it. So if you like this kind of stuff, the economic breakdown, the tokenomic breakdown of crypto projects, and the connection between what's going on in the world at large, because we are the blockchain technology, whether you talk about Bitcoin being property, world reserve currency, whatever people end up deciding to call this, and the other blockchain cryptos, it's a new technology that has wide-reaching effects, more than just money, more than medium of exchange. And we have some videos about that, some really unique things that have been created, that are being created, and so many things that are in the works that we have no idea. But as it comes out and emerges and we discover it, we are happy to share that with you.
Right. And we will. So like, subscribe, hit the notification, make a comment, criticism, whatever, compliment. We like it. We'll take it all. Yep. And until then, we'll see you on the next one.
Have a beautiful day. Namaste, y'all.
Thank you.